Traders at UBA say they expect activities at the fixed income market to be quiet this week while anticipating yields to trend north as traders move to sell down their positions this month. Chuka Nwachukwu, head of bonds trading at UBA, joins me to discuss this. Chuka, thank you so much. Always a pleasure to have you on the show.
Thank you so much, Esther.
So quite an interesting, quiet session, mixed sentiments, the usual at the market, but we are seeing one or two trends, and you and I have discussed that already, the anticipation of higher yields at the market, but another thing that's constant is the liquidity situation. But what can you tell us in terms of how trading has panned out so far today?
Okay, well, fine. Today actually wasn't so quiet as we expected. We've seen some few trades, especially on the shorter end, the 2025 and the 2026. We've seen a bit of bullish sentiment, and then this is also has to do with the liquidity in the system. On Friday, FAC came in, and so the system still have quite a number of liquidity, and that's why people probably trying to cover their position.
So where do we go from here? Is this a trend you see continuing, and how can we use this to forecast how trading patterns going forward?
Yeah, we expect that the yield will inch up this week. This month, there isn't much coupon payment, unlike the previous months. We've seen a total of well over 1 trillion coupon payment from the beginning of the year to date. But going into the month of May and then June, July, we wouldn't have such amount of coupon payment. So we expect that liquidity will thin out. So with that, we expect that yield will go up. I mean, if you look at the auction, the bond auction last week, where the reissued 2025 came out at 10%, and then the new issue, which is the 2032, came out at 12.5%, and then the 42 came out at 12.9%, and also it's the process. I mean, the yield pattern has taken that same direction, and we see this go up, maybe the longer end go up to as much as 13.5, 13.6, going into the months and then the subsequent month ahead.
Right. Now, it's been quite a journey for investors at Nigeria's fixed income market, particularly institutional investors who have all this cash and continue to survive in a real negative return environment. Now we have, of course, they're keeping their eye on the economy, they're keeping their eye on the big event that's coming, and that's the 2023 election. So if you could just take us back a bit in this kind of market cycle where we have an upcoming big elections, what is the usual trading investing pattern? What goes through the minds of institutional investors? What can we expect the market to? How can we expect the market to perform when we have these big events coming?
Yeah, so let me just talk briefly on the T-bills market, because that's also another market where, based on what you've just said now, the pre-election year, a lot of investors will like to keep it, on the shorter end. So nobody will want to invest in a long end, especially on the bond side, where you have maturities above 10, 20, 50 years. So on the shorter end, which is the T-bills market, we've seen that yield has hovered around 3.9 to 4.1%. And so this is not. It's something that is expected going into the election year, and so people just want to be safe on on their investment. And so every year, I mean, pre-2015 election, pre-2019 election, we've seen this pattern, and so we expect that people will be cautious. Investors will obviously not want to take unnecessary risk, and so that's why we see that even though yields are not so attractive on the T-bill side, you see that people playing on the shorter end of the bond side, which is the 2025 and then the 2026, and so this trajectory will continue into the election year.
But would you say that investors are also keeping their eye on the U.S. Fed? And I think you and I have had conversations on that, the increases we're expecting in the coming year. And of course, are investors also betting on inflation coming down? I know that's a bit of a stretch, but is there some hope, or are they seeing light at the end of the tunnel when it comes to inflation?
Well, inflation, I mean, especially as it has to do with us in this part of the world, Nigeria especially, our inflation figure came out, the last time came out at 15.7, and that's slightly upward movement from the previous figure. So, and you know, if you look at what has been happening in the economy, if you look at the petroleum crisis we just came out from, and then the prices of goods and services as well, you know, it's expected that inflation will go up. And again, pre-election, again, I want to come back to that again, because I mean, a lot of funds will be released into the system, a lot of spending. CBN is trying his best, but of course, you know, pre-election, politicians will want to spend, and there's little both the fiscal and monetary policy handlers we could do, can do about it. You know, there will obviously be a lot of liquidity in the system, and so we expect that this inflation figure will slightly inch up again before coming down. So for me, I still see it to go up slightly more before we see a downward trend.
Okay.